On today's video, we are going to understand whether you should be investing in Zomato's IPO or not. Please watch this video till the very end. I have presented technical analysis, fundamental analysis, business analysis. So please listen till the very end. This is going to be a very important video that will give you a lot of insights on the IPO market, how companies launch IPO, and how, as a retail investor, you should go about understanding the business at a fundamental level. So let me cover the story of Cafe Coffee Day. Now, Cafe Coffee Day has been one of the most prominent startups in India. It has expanded magnificently. It has over 1,000 stores. Now, if I tell you the story up until here, you will be super impressed. Back in 2015, Cafe Coffee Day or Coffee Day Enterprises launched its IPO to continue to fuel this growth. So they wanted to raise money in the stock market so that they could put in more money to expand this massive growth on which they were well underway. The stock opened at somewhere around 271 rupees. Now, if you would be holding this stock, it would be trading at 38 rupees. That is not the worst part. The worst part is, so if you take a look at this entire graph, you will realize that there was hardly ever an opportunity for retail investors to exit this stock, right? It had continuously gone down with very brief windows where the stock has shot up a little bit, where some very patient retail investors would have made little bit of money if they would have invested in the IPO. Now, let me make one final point about Cafe Coffee Day just before it got listed. So these were the last 4-year revenues, and look at the profit it was making in the last 4 years before it launched its IPO. So in March of 2012, it was making a loss of 175. That grew to 738 crore loss. That grew to 1381 crore loss. Then it grew to approximately 1600 crore loss. So, a loss-making startup launched its IPO, trapped a lot of retail investors, and now retail investors are suffering by holding this stock. So this is the story of Cafe Coffee Day. Let's move on very quickly to story number 2, which is about Amazon and Google, right? These were again loss-making startups before they launched their IPO, and after that they have seen prolific growth. Google has gone on to become one of the most valued tech companies. Same goes for Amazon, that it has become the most dominant e-commerce player in the world. So the point is that now you have a decision to make that, hey, should you be investing in Zomato? So you can look at story A, that hey, Cafe Coffee Day, it was suffering massive losses, and now as a retail investor you invested your money and you are still suffering. Or you should believe in story B, which is Google and Amazon, that Zomato might become the Google or Amazon of India in a way, in its own league and industry, and it can literally become $1 trillion company. So which version should you believe? So my overall summary here is that if you find a company, be it Google, Amazon, Zomato, Swiggy, whichever company, if you feel that, hey, after 20-30 years, this particular company can become literally the market leader in that space and become a dominant player in that space, investing in that IPO and holding that stock for 20-30 years might not be a bad idea. It can make you filthy rich, right? If you like that tip, do hit the like button. That would mean a lot. That would indicate to me that you appreciate me making this type of content. Now, let me systematically break down my arguments why I feel that Zomato's business model is structured in such a way that it might not grow at a pace at which experts are claiming that it would grow. To assess the business viability of Zomato, you need to ask yourself 3 very simple questions. Is Zomato the most dominant player in the Indian food tech space right now in India? The answer is no. Why? Because there is Swiggy. Swiggy started much later than Zomato. And right now, if you take a look at the valuations of both Swiggy and Zomato, they are fighting neck to neck. They are both approximately a $5 billion company. This is despite the fact that Swiggy started much later than Zomato. They are copying each other, they are structuring the same business models, and they are literally going neck to neck. But the bottom line is that Swiggy, despite being a newer entrant, was able to catch up to Zomato in a very fast time. So terming Zomato as the most dominant food tech startup in India might be wrong. Second question that you need to ask yourself is that is Zomato's current business model really good? Forget about the growth, right? I mean, we'll talk about that separately. But currently, if you look at the financial numbers, are they good? The short answer is no. Now here is the data in front of you, and I've made a separate case study on this where I've analyzed the unit economics, and I will link the video somewhere here. But let me quickly take you through some important numbers. So you can take a look at this particular chart, and here you can clearly see that Zomato has never been profitable, right? Its loss has been growing, right? It went, and just before the IPO, they figured out a way to cut down the loss. So they cut down the loss in this particular year, in financial year 2021, right? And what happens at the back end is that when these IPOs are coming out, so you need to understand a little bit of how this IPO mechanics work. What usually happens is that previously, right, in India, there was CCI, Competition Commission of India, that used to assist in terms of launching the IPO. right? Nowadays, in the present day, what happens is that this CCI work has been replaced by iBankers, right? Investment bankers, right? Now, you and I, we cannot parse through all this data, right? We can sit all day long. How do we know that, hey, it's only 2362 crores? This is not a public company. All the data is privately held. It's very difficult for us to get the actual figure that we can trust. So all this financial data, yes, they have given it, but we can't be sure because this is not a listed company and the data that they are giving out, it's not guaranteed that this is correct and how they have done the accounting. So anyways, back to the IPO launching mechanism. So now these days, iBankers help companies like Zomato launch their IPO. So CCI is a government organization. iBankers are private, right? And if you're working with Goldman Sachs, Morgan Stanley, these are all major private banks. Do you trust bankers? Please give a yes or no in the comment section. I would love to read your response and detail it out. Tell me why do you trust bankers versus why you don't trust bankers. I personally do not trust bankers that much. Honestly, they have a lot to gain. They will 100% make money on Zomato. We don't know how much of the percentage of shares they will release in the IPO. They will hold some of the stocks. They might sell it. They might rig the market, bunch of different things, right? So in the short term, right, it's guaranteed that these iBankers will make money because Zomato is one of the most talked about IPOs in India. And investment bankers will 100% make money on this because they know the exact situation, right? They have done the due diligence at the back end while working with Zomato. They understand the actual valuation. Now, valuation of anything can be anything, right? How can you say that, hey, you know what, the listing price of Zomato would be 89 rupees or 189 rupees or 289 rupees. It could be anything. Right? We don't know. We haven't seen the number. There is no historic record, historic financial data, trustable historic financial data regarding the business. So the bottom line, what I'm trying to prove in the short term is that, hey, so please do not blindly trust bankers. We have no financial data to make concrete decisions on. In the short term, there will be a lot of rigging going on. It is almost certain that the stock prices will fluctuate. It will go up, it will go down. And if you just hit the market at the right note, right time, you might make money or you might lose a lot of money and you might actually get stuck. Which brings us to the third and final point, that if you are investing in Zomato's IPO, right? And let's say that the listing price is 89 rupees, right? And you buy it and it gets listed at 89 rupees only and then it starts to fall down. Right? Then what are you going to do? You are going to hold it. You are not going to sell it. Then it again further goes down. You are going to hold it. You will not sell it, right? If it goes up, nothing like it, right? You have listing gains. Most likely in the short term, there might be some listing gains, but in the mid to long term, you should be very, very worried and you must do fundamental analysis of the business. Okay. Again, I would request you to check my previous case study that I had done on Zomato. But here are two quick points that everyone is telling that, hey, why Zomato will be successful, why it will just literally be one of the most revolutionary companies in India. So let me discuss two concrete things that everyone is saying. And let me explain this by using my whiteboard. Everyone who has been supporting Zomato's growth, they assume, right? They are saying that, you know what, Zomato is going to be a $1 trillion company or multi-trillion dollar company going forward in the future. And there are two reasons why this will happen. Number one reason is that they have access to a lot of data, right? They have access to so much data that they are going to pick all this data, how you order food, which food you're ordering, are you ordering a burger in Indiranagar or are you ordering burger in Rohini or whatever, right? And they will then, sort of use all this data and somehow turn this data into profits. Okay. So this is the first argument that, hey, Zomato is a super data rich company and they know everything about you. They even know, they can guess what food you're going to order next because they are a data rich company. Okay. Now, please answer the following question that, hey, it's not as if that Zomato is a 1 or 2 year old startup, right? They have access to this data for quite a few number of years. Why have they not been able to turn this into profits, right? That is my first key question. Just having access to data does not mean that you are able to use that data intelligently to generate profitable sales, right? Profitable sales, right? That is not happening. That is what the finances of the company tells us, that despite having access to all this data that people have been crazily talking about, the company has not been able to turn this into profit. So please remember that. Part B of this argument is, do you think that other companies don't have data, right? It's not as if that these companies will leave their jobs. In the immortal words of Abhishek Upamanyu, here is the meme. If you enjoy it, please press the like button. That would mean a lot. So the point is that other companies have ton of data as well. It's not about who holds the data, right? That is cool. these companies have already been holding and sitting on a gold mine of data, but turning this data into profits is something that the company needs to figure out. These days, everyone has data. Data is not an advantage anymore. The entire quote that, hey, data is the new oil, it's true, but it was true up to a certain point. After that, you need to figure out your business model. You need to do a ton of other things to turn that data into profitable businesses. Now, the second point that majority of the people would say that, hey, Akshat, you know what? There is a concept of cloud kitchen, man. This is like something that, that will blow your mind away. This is like such a profitable thing. And you know what? Zomato is going to pivot its business model to cloud kitchen, and it will become like so profitable that your head will spin, right? Okay, so let us systematically break down that argument also. In order for me to explain this point better, let me quickly clarify a few definitions, right? So there is a restaurant, right? That is very simple. There is a physical restaurant, right? There is something called as cloud kitchen, right? And then there are franchisee services, right? So let me explain this via an example that will make it very simple. So for example, physical restaurant is that you and I we go to ITC Bukhara or Maurya Sheraton. They have physical restaurant, right? So you go and sit and eat. So of course, the expense here will be super high. So this was the traditional way of how restaurant industry used to operate, that hey, own like physical property and open up restaurants. People will come, they will enjoy, have a gala time. The problem here was these restaurants were super expensive, right? With me till here. The second point is that then we move on to the concept of cloud kitchen. So cloud kitchen essentially means that, you know what, you don't have any physical property per se, right? So your cost associated running a physical kitchen goes down. So essentially it's not as if that, for example, if ITC Bukhara is running its kitchen, it will have a physical kitchen, right? That kitchen is associated with a restaurant, and that kitchen serves the restaurant serves the customer in a way, right? So that's the model. But in cloud kitchen, what is happening is that essentially there is like, your home can be used as a cloud kitchen. So there is just small space. You are cooking food in this space, and then you are sending out orders, right? This cloud kitchen can actually serve restaurant 1 also, restaurant 2 also, restaurant 3 also. So 3, 4, 5 restaurants can come together, and they will say that, you know what, we just need food. Just prepare it in a virtual way. Just send it to us and we will serve it to customers. So this is what the concept of cloud kitchen is. Right, I hope you are with me till here. So this cloud kitchen concept is actually revolutionary, and I completely buy the argument that cloud kitchens are much more cost effective, right? Because it gives an opportunity to all these restaurants that are collaborating with these cloud kitchens or are starting their own cloud kitchens to cut down on its rent, expense, and bunch of other different things. Now let me take you to the website of Rebel Foods, which runs one of the oldest cloud kitchen services in India called as Fasos, right? So when we click on Fasos, you will understand that, hey, this is a cloud kitchen service. They don't have a physical restaurant. They essentially are preparing meals at some random place, and then they are packaging those orders and sending it to your place. That physical kitchen attached to a restaurant is not required when it comes to Fasos. So they can prepare this food anywhere. They just have to get it delivered to you. This is the cloud kitchen model. And Rebel Foods, which owns all these different brands, be it Fasos, be it Mandarin Oak, be it Oven Story, all these brands are owned by Rebel Foods. Important point to note is that cloud kitchen, for example, Fasos, might be preparing meals for Mandarin Oak also and Oven Story also, right? So that is the utility. Now what will happen is, and let me take you back to the whiteboard. So if we take a look at the Rebel Food model, what is happening is they have something called as Fasos, which is the virtual kitchen or the cloud kitchen. Now they might be serving orders for Mandarin Oak, right, which is a Chinese restaurant. Right, they might be serving for Behrooz Biryani, right? Behrooz Biryani. They might be serving for Oven Story as well, right? So essentially, rather than having 3 separate kitchens, they are delivering it via Fasos, right? That's just an example. Some mechanics might be wrong, but hopefully this helps you understand the concept of cloud kitchen and the concept of franchisees, right? So franchisees means this, that Mandarin Oak just does not have one single restaurant, right? It has multiple, right? Multiple locations. Behrooz Biryani is there in Gurgaon. It's there in 100 different locations, right? So they are building a brand and they are building a franchisee, right? Please do not confuse virtual kitchen or cloud kitchen with franchising, right? McDonald's is not a virtual kitchen. It is franchisee business. Similarly, Behrooz Biryani is not a virtual kitchen. It is a brand building, franchisee building business. Similarly, all these brands, right? Oven Story, Behrooz Biryani, Mandarin Oak, McDonald's, what are they trying to do? They are trying to build, number 1, a brand. Number 2, what are they trying to do? they are trying to turn this into a franchisee, right? They are not satisfied by just building one single restaurant. They want to turn it into hundreds, thousands of restaurants, right? This is a very, very important concept to understand because this is what dictates whether Zomato will grow or not. Now, this brings us to the most critical question that, hey, now Zomato might launch its own cloud kitchen, right? The short answer is no. They are not going to launch their own cloud kitchen. This is unlikely that they are going to try to compete head-on with something like Rebel Foods, which are well ahead in the race, right? That is not what Zomato's core advantage is. Now, tell me this. Think of it from a Rebel Foods perspective. Now, Rebel Food is creating so many brands. They are creating like Behrouz Biryani. They are creating Avan Story and bunch of different brands. Brand 3, brand 4, right? Where is Rebel Food struggling? Right? What is it that Rebel Food needs help with? So they need help in two terms. Number one, they require discoverability for their restaurants, right? So they have built so many different brands, but how do people discover? For example, tomorrow if Rebel Food wants to start an ice cream brand and they just simply launch a new brand and no one is aware, it becomes a problem. So Zomato's primary advantage is discoverability, right? They are going to help improve the discoverability of different restaurants. That's it, right? The second problem that Rebel Food faces is delivery, right? Because Zomato, Swiggy are effective delivery option, right? They are able to deliver food very, very effectively, right? So these are the two critical advantages, and that is the reason why I'll flash an article also that Rebel Food actually does 50% of its sales via Zomato or Swiggy, right? Zomato, Swiggy, right? This is an important point to note that, hey, it's not as if that Rebel Food is stepping on Zomato's turf, and it's not as if that Zomato is stepping on Rebel's food turf. You might say that, hey, Akshat, you have been speaking about Rebel Food so much. It's actually a big company, right? It is valued close to $2 billion, right? So it's not a very small fish that anyone can come and pick out, right? They own very strong brands. They have built these brands. This is what gives them power, right? They are in the brand building game, right? They are building brands restaurant after restaurant and expanding it and getting into this franchisee game. So this is the primary advantage of Rebel Foods, that they own cloud kitchen and then they have created these different brands so as to reduce the cost, right? Now you might say that, hey Akshat, you know what? This is awesome, right? Why can't Zomato do this as well? Like, why can't they go and replicate Rebel Food, right? Because Zomato is number one solving a different thing altogether. Even if you look at their cloud kitchen model, what are they trying to do? Zomato is actually trying to get more and more partners like Rebel Food, right? They want Rebel Food to be on Zomato. Why? Because they can solve this discoverability problem for Rebel Food. Similarly, they want small restaurant owners like me and you. If we are opening our restaurant, what will we struggle with? We will struggle with discoverability and delivery. So they want us to open the cloud kitchen in our homes and then go and partner with Zomato. That is the game that Zomato is already currently playing. Now you might say that, hey Akshat, you know what? Okay, why can't Zomato just literally like kick everyone out, right? I mean, why can't they just completely eliminate Rebel Food or acquire it completely? Why can't they do that game? So number one, Rebel Food is already a big player. There are multiple other smaller brands. Zomato can't go around acquiring every single thing, right? For example, if McDonald's decides not to work with Zomato, would it be a loss for Zomato or would it be a loss for McDonald's? Of course, it will be a loss for both. But the bottom line is that McDonald's is valued at $220 billion company and Zomato is a $5 billion company. Of course, McDonald's will be able to survive, right? That's not a problem for them. How to get their burgers to people who want burgers, right? They are massive in their approach. So don't assume that Zomato is such a big company that it can just go out and start acquiring every company left, right and center, right? That is not going to happen. Food brands are much bigger than Zomato right now. KFC, bigger than Zomato. Burger King, McDonald's, bigger than Zomato. Even Rebel Food is like 40% that of Zomato, right? So please don't make the mistake that Zomato has the firepower to go and start acquiring everyone. Their best strategy is to actually partner and they are very much on that path. So this brings me to the final part of my argument that, hey, now Zomato can become a massive company, right? They can upscale their revenues like anything if they go and convince everyone, for example, Rebel Foods, to partner with them. We have already understood why Zomato can't go and acquire everyone, but they will look for partnerships, right? They will partner with Rebel Food. They will partner with me. They will partner with you, right? What then they will do? They are going to charge commissions, right now, right? And then what are they going to do? Once all these people depend on Zomato, they are going to keep increasing the commissions and that is where the money will roll in, right? With me till here? Absolutely. Now, this idea sounds great in theory, right? It is wonderful in theory and everyone has been suggesting this, that Zomato will become massive because it can jack up these commissions. Sounds really, really interesting. But here is where the difference is, that these companies understand, they are businesses, they understand the Ola Uber game, right? What happened with Ola Uber was that Ola Uber was an aggregator, right? They used to go and acquire drivers, right? Initially, they gave like excellent incentives to drivers that, you know what, take like 90% commissions what we are getting. Then first driver signed up, second, third, then thousands of drivers signed up, right? Then this aggregator became really powerful, right? And then what they did was that from 90%, they brought it down to like 50%. Hey, now we will keep 40% of the profit. Do whatever you want, right? Do you think that these businesses are mad, right? They don't understand the simple business model. They have built billion-dollar enterprises. They understand that, hey, you know what? This thing is not going to work out, right? We need to figure out a way not to give enough power to Zomato, right? Now, this is where the beauty of this concept lies. And there is a tug of war happening between brands and Zomato plus Swiggy, right? I'll explain why am I bringing Swiggy into the picture. They are trying to pull the rope this side and these brands are trying to pull the rope this side, suggesting who owns more control. Because if they start depending entirely on Swiggy and Zomato will crush them by increasing the charges, right? Commissions. And they will become massively profitable, right? These brands, be it McDonald's, be it KFC, be it Fasos, be it different brands that Rebel Food has created, they understand this point really well. If a person like me can understand this, then someone at Rebel Food does understand it. If you agree, please press the like button. That would mean a lot. Now, moving on very quickly. Now, in order for Zomato to become massively profitable, right, they need to control this side of the rope. They need to capture majority of this rope and these brands will not let it. How? They are already sending you flyers. They are already building their own delivery systems. They are already taking signups. They also have data, right? They are also leveraging data, right? They are doing everything possible and these brands are actually well known and advanced, right? For example, if Zomato has to compete with Behrouz Biryani is already established. It's already there, right? Operating for the last several years. Biryani Blues has been operating for the last several years. Zomato, just because it solves the discoverability problem, does not mean that it can go and launch Zomato Biryani and suddenly people will start buying from Zomato Biryani and give up on Behrouz Biryani and Biryani Blues. That will not happen. Brands are powerful and companies have already invested years and they are years ahead of Zomato. So, this is what is going to happen next, right? Most likely scenario is that Zomato and Swiggy, one of these would acquire the other company. And that will give them more power to pull this rope on their side. And that is the time when these companies will become profitable. So, in the mid-term, do you see this happening? Absolutely not. Both the companies are eyeing neck to neck. So, if a brand gets messed up by Zomato, if Zomato is charging a lot of commission to a particular brand, that brand has the option of going to Swiggy to solve its discoverability problem. These brands on the back end, they are already developing their systems. But yes, I do agree that at one point will come that Swiggy will acquire Zomato or vice versa, and that is a stage when these companies will start making profits, right? And it will translate to higher share price. This relates to the start of the story, right? I hope that you listen to the starting of the story very carefully. Why do you think that Google and Amazon became such dominant players? Because they are a class on its own, right? There is no company that can replace Google right now. They are massively dominant. There is no comparison between Yahoo search engine and Google search engine. Google is used much widely. Similarly, Amazon, in terms of e-commerce, it's much bigger than something like Flipkart, right? So the point is that these type of companies start giving positive returns to the shareholder when it's clearly established that they are the most dominant player. But unfortunately, right now in the Indian market, Zomato and Swiggy are going neck to neck. And that is the reason why I would not be investing a penny in the Zomato's IPO. There might be some listing gains because that is extremely short term. There is always volatility. You can make money. But mid to long term, it's a risky proposition and therefore I'll not invest. I hope you enjoyed the video. Please give it a thumbs up and I'll see you the next time.